Back to Muffet Investment Views, where we dive deep into the market to bring you the most insightful investment analysis. If you're new here, make sure to hit that subscribe button and ring the bell so you never miss out on our expert takes. Today, we're zooming in on Mosaic Company, a giant in the potash and phosphate industry whose stock has taken a nearly 60% tumble from its peak. What's going on and what's next? Stay tuned to find out. Mosaic has been a formidable player in the commodities market, but like many in the sector, it's seen a significant drop in stock value. With potash and phosphate prices falling back to pre-war levels, investors are understandably nervous. But could the current geopolitical tensions and the climbing crude oil prices signal a turnaround for these essential commodities? In today's analysis, we'll unpack how rising global tensions and increasing crude oil prices might just be the catalysts needed for Mosaic's comeback. From supply chain intricacies to demand dynamics, we'll cover all the angles to give you a comprehensive view. We've looked into the annual reports and researched on the stock and present you with what we've found about the future of Mosaic stock. So, let's break it down, starting with the impact of recent geopolitical events on the market, and also present an options idea which we think is a low-risk way of investing based on our analysis. Mosaic is mainly involved in the mining of potash and phosphate fertilizers and have three segments. The phosphate segment has phosphate mines in Florida and processing facilities in Louisiana. They also have 75% stake in the Misco mine in Peru and a 25% stake in MSBWC joint venture in Saudi Arabia. Their potash segment has potash mines and processing facilities in USA and Canada and are members of the Canpotex Alliance. Their Mosaic Fertilizantes business has phosphate and potash mines and plants in Brazil. Mosaic Company financial metrics. Current share price is $31.12. Current market capitalization, $10 billion. Price-earnings ratio, 8.89. Net earnings for 2023, $1.1 billion. Total debt, $3.5 billion. Dividend yield, 2.7%. Total revenues in 2023 was $13.7 billion, with the potash segment producing nearly all the profits at $1.1 billion. At the start of the war in Ukraine, when there was uncertainty about potash exports from Russia and Ukraine, the potash and phosphate prices spiked, and the share price of Mosaic Company spiked as well. It has now come back almost to where we started before 2022. The prices of the phosphate and potash has come back to nearly the levels they were before 2022. In general, the price of Mosaic follows the energy complex. Ammonia is made from natural gas, and if natural gas prices spikes, so does the price of phosphate and potash. Also, increased oil prices will make biofuels more profitable, and this will increase the demand for fertilizers. If we look at the Mosaic stock versus crude price chart, the Mosaic stock closely follows the crude price. More recently, even though the crude prices are starting to rise, the Mosaic stock has fallen. We believe that this could be because the natural gas prices has been relatively low due to abundant availability of shale gas. The recent geopolitical events underlines the problems with energy prices. A lot of oil passes through the Hormuz Strait, and if there is escalation of problems in the Middle East, the oil prices will spike, and so will be the natural gas prices, as it generally follows the oil price, and Europe depends on Qatar for its LNG needs. Demand for fertilizers had fallen last year following the spike in demand in 2022, but as you can see on this slide, it is starting to increase again. They forecast capital expenditures of $1.2 billion, $200 million less than a year before. They distributed all of their earnings in 2023 from dividends and share buybacks. Each $10 increase in price of the fertilizer price will increase their cash flow by $50 to $60 million. Why do we like fertilizer stocks as a whole? The world population is growing and the amount of arable land per person is reducing. Together with desertification of food-growing regions has put food security at risk. China has banned export of phosphate fertilizers in a bid to ensure food security. Also, the world population is still growing even though the rate of growth is falling. By 2050, the predicted world population is 9.7 billion, which is a 15% increase from current level. Sudden changes in the weather patterns might cause floods or drought will reduce food production and can cause significant spikes in food prices. As we are already living in an inflationary environment, these spikes can be exaggerated. This will lead to increased prices for the fertilizers as well and will boost Mosaic share price. Overall, we think that Mosaic stock has limited downside as prices of the fertilizers that Mosaic sells have almost reached pre-war levels, and provided the prices do not fall further, the stock shouldn't fall further. And it could also be a potential takeover target. BHP is developing potash mines in Canada, and if the opportunity arises, then they might swoop in on Mosaic, especially if synergies could be achieved. This is just speculation, and we are not aware any information regarding this. Any disruption in oil supply in the Strait of Hormuz could be a boost for this stock. Mosaic have a $3.5 billion debt burden for a $10 billion stock, which is on the higher side. This is a risk for the stock that we want to inform investors. The following slides show the option prices for the January 2026 expiration. These are taken at market close on the April 12, 2024. Whenever there is increased volatility, the options prices increases, and these are the best times to sell options as we get higher premium. One simple strategy is to sell the puts. We like the $27.50 puts, which are trading at $3.60. If we sell these puts, we collect the $3.60 as premium. If Mosaic price does fall, then we maybe assign the shares. But because we have already collected the premium, our entry price would be less than $25, which is a very low-risk entry into the Mosaic stock. If Mosaic stock rises from current levels, then we get to keep the premium. A more aggressive strategy than just selling the puts is as follows. Sell the January 2026 $27.50 puts and use the $3.60 collected and buy the January 2026 $25 to $30 call spread. The price for the $25 call is $9.70 and the price for the $39 call is $7.32. As we are buying one call and selling another call, the difference is $2.38. Instead of just buying a call spread for which we have to pay to own, we are selling an extra put and use the premium to buy the call spread, which is below the current share price. This is a very conservative strategy where we get paid to own a call spread for promising to buy a stock at a lower value. We still get to keep the difference between the premium that we collected from selling the put and the price of the call spread, which is $1.22. In January 2026, if Mosaic stock is above $30, we get to collect the $5 from the call spread and also keep $1.22, which we collected. In January 2026, if Mosaic stock is below 27.5, then we will be asking the stock, which we are happy to buy at those levels, and we still may have some premium left over in the call spread as long as price is above $25. If the price of Mosaic stock is below $25, the call spread will expire worthless. We hope you liked this analysis and options ideas, and we would be grateful if you could like, subscribe, and share. Thank you.